Welcome everyone to this week's edition of Our New Normal. Hi, it's good to be ranting with you again today, Harry.
Thank you, Jackie. It's great to be here.
And what is happening in your world this week? What is your new normal?
Oh, I'm so excited. I'm going back to school.
School.
Yeah.
When's that happening?
So I'm starting a PhD program, so it will start in September. So very excited for that, scared about that. And my eldest son, Ryan, is also going to school.
Yes, he is in September.
Yes, so he's going to kindergarten. So both of us will spend our evenings studying and doing homework.
Oh, you can sit at the kitchen table together.
Yeah, and do
Good
homework.
for you. I'm excited for you. I know you've
Yeah.
wanted to do that for a while.
Yes.
So getting prepared in your mindset for that for September's
Absolutely.
is really great. So.
Yeah. How about you? How is your normal?
Oh, let me think. Well, continuing on the school theme, I am in the midst of final papers and projects with everyone. As you know, I've been teaching this semester. And I have discovered there is a reference site called MBA School with a K.
Wow.
So upon meeting with some of the students, of course, I've encouraged them to go back to the drawing board and start their projects over. And just recognizing people tend to grab other work that is not, as you know, meet our requirements at school, but that is school with a K. So it does not belong on a reference list, and it does not belong at our school. So
It's
that was
important to give proper references.
yes, and
Yes.
not plagiarizing or copying work. So
Exactly.
that's been interesting this week, but school with a K. So I'll deal with that. I know this week we had talked about starting a conversation and about retirement, and you know I
Yes.
have a lot of ranting about retirement. However, given what's happening this week, and it's Thursday afternoon that we're having this chat, I thought it was really important and probably really interesting to get your take and explain to our listeners what is happening with our markets and what really is there to learn about what is going on with our economic trade war, and to put it in common language for our students, for our friends, for our parents, to really understand what is going on right now in Canada and what can we do about it. So let's take that on because it was so significant this morning.
So let's start with it. So we are having a fire sale right now. Markets are down.
A fire sale.
Fire sale. So in the last 1 year, if you see, Nasdaq is down by 15%. S&P 500 is down. All global markets are down, including the Canadian TSX.
Now that's this week, right?
This week, starting from when Trump got inaugurated, the markets have slowly moved down.
Yes,
and
there was
we
a
had a
shift
panic
before
sale
Christmas.
like today, right? So because Americans have started the trade war, right? It actually began few weeks back,
Yes.
right? But they have escalated the trade war now, and they're going to have a tariff on all products all across the world, right? So let's understand what's happening. So if you a history lesson for people who like history,
And for me too.
yeah. So till the early 1900s, America was started in the 1700s. Till the early 1900s, that is almost 200 years of their history, they always had a tariff, right? They always had a tariff, and they had zero income tax. So that was a very different world. So Americans used to charge tariffs on whatever products were brought from outside, and to their internal people, they did not have any income tax.
So the tariffs back then funded the entire country.
So the tariffs back then funded the entire country, right? Then we had the Great Depression. After the Great Depression, we had the World War. Now World War I followed by World War II. Now, how do you fund World War I and World War II? So Americans were finding it hard because the trade had stopped, right? When war happens, the trade decreases, the volume of trade decreases. So Americans figure out to fund the war, we need to tax our own citizens. So that's where the income tax started. So they started taxing their own citizens in order to fund the world wars, right? So World War I happened, World War II happened, right? trade was almost standstill, so tariffs did not make sense, and they started moving funding away from tariff to income tax.
And in Canada, we followed suit.
Followed them. We always follow the Americans, right?
Okay.
After the world wars ended, there was a Democratic president, there were a Republican president. Under both the terms, they thought of restarting the tariffs. But after the world wars, there was no other global economy left, right? Except the Americans, right? Rest of the world was completely shattered. The European Union was shattered. Russia had a big losses in the war.
Yes.
Right? Japan was like not doing well. China, India, after the colonial, especially India, did not do well, right? The global share of Indian GDP was very low. Same thing with China. So American thought this is not the time to start the tariffs again. So they went into this out of the generosity of their heart, right? They actually rebuilt the entire world, right? They had the Marshall Plan to rebuild European Union, right? So Americans paid from their pockets to build the world. Through the Marshall Plan, they built Europe. Through economic help to Japan, right, and other countries, they built those other countries. So they took on pain. Like, people need to understand it. Americans took on pain, right, in order to rebuild the world, right, using the Marshall Plan, using other plans to rebuild Japan. So they lowered their tariffs, right, and increased their income taxes to fund all of that.
Okay, so they took on
economic pain in order to rebuild the world.
To rebuild the world.
Yes.
And nobody else was in a situation at the time to be able to do that.
No one could do it.
Only the States.
Only Americans could, because they emerged as a winner. They were not impacted by the war, right? Wow. War was not fought on American soil, right?
Yes.
Right. American mainland. It was fought in some islands, but it was not fought on American mainland. So it was not destroyed. So the rest of the world was destroyed. So they had to rebuild that. They took on the onus to rebuild that, right? And since the other countries did not have an economy, right, they couldn't rebuild their armies. They couldn't rebuild the navy fleets. So American took on an additional role of protecting the world. So they were policing the world, right? None of the other countries had the capacity to police the world. So Americans started to police the world, but there is a cost to do that, right? They had to have open American bases all over the world. They had to patrol the seas, and there is an economic cost of that.
Yes.
Yes. But Americans have decided not to do that anymore.
In today's world, in 2025,
they have decided
they don't want to play that role
the world
anymore.
has rebuilt itself, right?
Yes.
Americans charge the world 2.5% tariff. The average global tariff on America is 10%. So still they are tariffing the world at a lower rate than the world is tariffing them, right? So they have decided that they are not going to do that anymore. Okay? And they have also decided that they are not going to police the world anymore to the same extent that they used to.
They have to. And that has to do with the NATO conversations, right?
Yes.
And that is why we've been asked as Canadians to meet the minimum requirements, but so have others.
Yeah, I'll give some context and some stories behind that. So in recent Signal leak, so there was a Signal chat and it leaked, right? If you read through that Signal chat, right, what were the Americans doing? Americans were like destroying the Houthis. Houthis are out of Yemen, right? They are funded by Iran, right? And they were causing trade disruption for over 1 year now, right? So I'll give you some context. So 40% of European trade, right, goes from the Yemeni corridor, goes from the seas that the Yemenis control, the Houthis control, right? Only 3% of American trade actually goes from that corridor, right? Now Houthis, because they were attacking the ships, they had stopped that route completely.
Okay.
So Europeans had to circle the world in order to import something or export something. So what was it doing? It was making European prices expensive. European goods and services, like goods specifically, were getting more expensive. By how much? 0.4%. So 0.4% of European inflation was coming out of Houthis attacking ships. Now the question is, why were the Europeans not doing anything, right?
Yes.
There is the British army, there is the French army. The reason is they don't have the capacity.
Okay, so
They did not have a
Americans stepped
capacity.
in.
They don't have the naval capacity to destroy, right, a rebel group out funded by Iran, right, Houthis. So what did Americans have to do? Americans had to go there and destroy the Houthis, right, in order to save the Europeans.
Now this may
European
seem like
trade.
yes. Now, what is the impact to the states on that? Can you explain that? Or who were they asked to do this?
No, because like out of goodwill, it doesn't impact the states that much, right? Only 3% of trade.
No, I know. So then why did they step in to do
Because-
this? I know it's a good thing to do. But based on everything, as a lay person watching,
Yes.
they didn't have to do that then. So
Yes.
were they asked?
No, because like that has been their policy for the last 80 years, right?
Just step
So
in.
just to step
Just to
in
go.
and help out the allies, right? But allies have progressed too, right? Like Europe has rebuilt, like Japan has rebuilt, right? Canada didn't get impacted in the war, so there is no rebuilding. But we are okay. We are a developed country today. So what Americans are asking is, whatever is your GDP, out of that you put 4% towards defense, and none of the NATO countries are meeting that target, right, including Canada, because in Canadian context there was a spy balloon that came on Canadian waters and it was spying on Canadian territory. It was a Chinese balloon, right? What did we do? We ring up the Americans to fly an F-16 and blast it out of the sky. Why? Because we don't have the capacity to do it.
We don't have the
Yeah, we are not fast enough. We are not, like, our armed forces are not, yeah.
So let's go back for a second here. You said we called and said, could you take
do
this balloon down,
Yes.
right? Did the European Union call about the Houthis?
Yes.
Okay, they did.
Yes.
So they asked for help and
Yes.
Americans stepped up.
Yes.
Okay, that's what I wanted to get back to. Or was America just taking it?
No.
No, so they were asked to step
Yes.
in and do that. And in doing so, they also created their own little scandal with.
Yeah, that the
That's a
leaks
different
happened
situation.
and like whatnot.
Yeah. But that is how they came to go in and
Yes.
bomb in Yemen.
Now, how is it relevant? So Americans are asking all allied countries to jump up defense spending.
Yes.
Canada is also agreeing to do that, right? Because we need it. It has real life consequences. If you go to our eastern coast, there is a lot of fishing done, right? We pride ourselves in doing a lot of fishing, the eastern
Yes.
provinces too. But very close to international waters, and like there are breaches in the Canadian waters a lot by the Chinese and the Russians, and they bring their fishing vehicles and they empty out our stock. It has been happening, and we do not have a capacity, right, to really stop that on our own. We can do it right now with the Americans, but we do not have a capacity to do that on our own. So we actually need nuclear submarines, right? 2 on the western coast, 2 on the eastern coast to do that. Another thing, China is not an Arctic country. It doesn't have an Arctic territory, right? What it did, it called itself a near Arctic country and it bought some icebreakers, right? Because it is entering via Russia into the Arctic zones. The Arctic is melting, trade routes are like getting exposed, and Chinese are breaching there. It is Canadian territory, but we do not have icebreakers to patrol it. So we have to increase our defense spending. The allied countries are going to increase the defense spending.
Okay.
What real life consequences we have? when you spend more on defense, you have less spending elsewhere.
Yes, of course.
Yes.
There's only so much money and so many expenses.
Exactly. So when you do that, right, what happens? The other sectors the spending becomes less. So the performance of those sectors becomes less. The defense spending increases. So the performance of the defense sector increases. Europeans are already committed to spend 1 trillion euros on defense, right? We are doing that too. So like people who are wanting actionables from our conversations, it's a good time to look at defense sector as an investment.
Okay.
Yes.
So then let's think about this going into what's happened today with the markets. I wouldn't say they crashed, but they definitely took the biggest dip that we've ever seen, right? Because of all the countries that Trump has announced these tariffs on, or reciprocal tariffs.
Yes.
So let's talk about the 20-something.
Yes.
What can they do in this time, in this age, or when they see this and we're trying to encourage our young people to invest for long-term wealth?
Yes.
What's your message, or what can they be doing?
So let's understand the tariff part a little bit more deep so that you get context, and then we'll talk about actionable for the 20s, right? So in terms of tariffs, what's happening? Americans charge 2.5% average tariff, 2.4 something, right? The world charges around 10%. It's not true that no country charges 70% on an average, right? That the calculation was somewhat fuzzy, what was shown, right? 10% and 15% you can average out, right? It's not fair though. So we are going to land somewhere in between where it's fair. So Americans are going to charge more tariff. It's not going to be 30, 50% on Chinese goods. It's not going to last. There are going to be deals made, right? The world is going to decrease the tariffs. Americans are going to increase the tariff, but the sweet spot will be somewhere in between. Now, how does it impact Canada, right? We are so integrated with the Americans in terms of goods and services that we produce, right? So example, if Americans are shipping plastic, right, and the rest of the world is buying it. Now, the rest of the world has 10% tariffs on that plastic right now. So it becomes like little bit less competitive in the global market. But to build that American plastic, there was Canadian crude that went into it.
Yeah.
There was electricity maybe from Quebec that went into it, right? There was some other rare earth mineral from Saskatchewan that went into it. So the final product that was an American is not completely American. Canadian inputs are all across in all products, right? But when other countries charge tariffs on American product and make it less competitive, so is the Canadian products getting less competitive. So what does it what happens when world charges Americans less tariff, right? Canadian products get more competitive because we are so integrated with one another. So our trade is going to boom. This is little controversial, right? People think, Canada is being impacted, right? It is very forget the rhetorics on both sides, right? There are large size egos that every person in politics has. So there is a lot of rhetoric. US, the Kuzma, right? Kuzma products have no tariffs on them. Kuzma products are 95% plus of our trade is Kuzma. So we have virtually no tariffs on 95% of products that we trade with each other, right? In United States, in between United States, Mexico and Canada, right? But if rest of the world reduces tariffs on American final products, right, Canada and Mexico benefit too.
Because we are so integrated, and when the US goes up, we go up. It's like this.
Yes. It's like a flexible cycle, right? So if we have not free trade but a fair trade with the world, right? If Americans have fair trade with the world, Canada has fair trade with the world by proxy.
Okay.
Now, how does 20 something get impacted by that?
Yes.
If more manufacturing happens here, if more trade happens here in the North American continent, right, it's better for 20 something in terms of careers, right?
Careers, and
Yes.
what about investments or long term? I guess in your 20s, it's mostly about working,
Yes, working
maybe
and
going to
investment.
school,
So,
finishing school.
yes, working, but that too, what kind of working? So there are two sectors. There is knowledge economy and there is the hand worked economy. So where you work with hands,
Yeah, trades. And
trades or manufacturing or like supply chain work and all of that. And there is knowledge economy where you sit in the office and you do some work. Now moving manufacturing back into North America, right, helps people who work with hands, doesn't help people who work on desk. So jobs in the next decade or so, whatever jobs are going to be generated more, right, are going to be manufacturing or trades related jobs,
Okay.
right? So so like simple analogy, whatever job you work with your hands, right, is going to benefit. Whatever jobs you do not work with hands is not going to benefit so much. So if you are a young person, plan your career accordingly. Like if you like working with hands, you're going to enjoy the next decade or so when a lot of manufacturing comes back, right? A lot of trades come back. We build infrastructure again. We like build a lot of those pipelines and like whatnot, right?
We've heard a lot of that talk
Yes.
about the infrastructure
Yes.
and the manufacturing coming back to North America
Yes.
to create jobs. And
And
so
even without Americans, like Canada has decided to reduce the reliance on Americans, right? Good for us. So
Yes.
to do that, we need to have like cross country projects. So cross country projects get built when you have tradespeople building them, right? When you have people transporting the goods, right? So all those jobs are going to outshine jobs in the knowledge sector,
The knowledge
where you were
sector.
thinking and doing office work.
and we won't even get into the AI conversation today
Yes.
at all, because that's another round we
Yes.
could have. So what about the 20 somethings, a piece of advice we could give them? Stay out of debt, or how do they create
Okay.
a life for
So,
themselves while
one
they
by
build a
one.
career?
So work is clear. You focus more
Yes.
towards and it doesn't mean that you have to work by hands,
No.
right? You might find a job where it is an infra project and you're managing that, or maybe you're doing payroll in an infra company, right? So jobs would be generated more on that side, less trade related jobs, more like manufacturing or infra related jobs. Now once you have done that, when you got a job, right, the second part, the markets are not like the stock market, the housing market is not going to increase at the same pace that we have seen in the past.
Okay.
The stocks are not going to rally 20% per year, right? The houses are not going to increase so fast. Housing is already crashing all across our country, right? Prices are going down, right?
Well, they're correcting a
They're
little bit. They
correcting.
did go up substantially.
Yes, they are correcting, but we might not get the same kind of growth, right? Now it is a good thing for 20 something because nothing lasts forever. So this slow growth period in stocks and slow growth period in real estate might not last forever, right? They might start picking up. So it's a good time to buy. If you if you have little money, it's the best time for you because you are going to get houses that are cheaper, you're going to get stocks that are cheaper, right? So if you can stay out of debt, manage your money well, right, you're going to get houses and assets that are cheaper.
And then thinking back to when I was in my 20s, then they are going to have that long run of time in the market.
Exactly. To build wealth.
To build wealth.
Yes.
So today's decrease in the market and what is going
Yes.
on with our economic tariff war for the 20 somethings is generally okay with good principles about get a job, get some education, choose
Yes.
accordingly, and
Yes.
stay out of debt.
Exactly.
But this is the time of life where I read this recently, Harry, this week. Millionaires will be made during this time.
Absolutely.
in years to come,
Yes.
this will build the wealth
Yes.
for the next generation.
And if you think about it, like I do feel bad for myself, like I do feel bad for people who have wealth, but because stocks have gone down a lot.
Yes.
But that's a good entry point for young people. I like there are condos in like there are houses in GTA that were selling for $1 million, and they have taken a $200,000 haircut now, right? So bad for those people who own those houses, but good for those
for the
people
20s.
who are trying to get into housing market, because housing was running away from young people, and it's not their fault. Because I was reading a statistic 25 years back, a house was 3 times of your average income. So if you had a $50,000 income, a typical house used to cost $150,000. Those houses have ran away from young people. So a typical house is now 10 to 11 times of average income. So if you have
Wow.
a $50,000 wage, because wages have stayed flat for the last 20 years, right? They haven't moved much. So if you have a $50,000 wage, if you're a carpenter, like you're working in an auto plant, right, earning $50,000, the house, or you're a nurse, right, earning $80,000, you cannot afford a house because it is 10 times of your income.
Yes, it feels so out of reach. And that has historically and generally speaking is that Canadian dream, is to have a house.
Yes.
Which is another rant that we'll have.
Yes.
But it's more about housing and the new normal that we're experiencing today. And so my feeling is,
Yes.
from our conversation, is that we can let our 20-somethings in our lives know that this too shall pass.
Yes.
But if you manage through it well enough,
Yes.
you will come out ahead.
Yes.
And that is what I've been reading about when I looked at the stocks this morning.
Yes, because like not many people would know this, but if you analyze like Trump's victory, like President Trump's victory in the last election,
Yes.
it can be divided like very well based on income levels. If you had $100,000 or above income,
Yes.
right, you are a very reliable Kamala Harris voter. If you're rich, right, if you have an income of $100,000 plus, right, you're a very reliable Kamala Harris voter. If you have income of $100,000 and less, you're a very reliable Trump voter, right?
And what is the current average salary? Do you know of a family in the States, or of a household?
Household means like
Or what's the
just
salary?
so salaries, like the average income is around $80,000, right? Median income in United States is around $80,000, right? So that's why he got the popular margin, right? Little over 80,000, 100,000, right? People have voted. Now, what do these people want, right? So people over $100,000 income have lots of assets. They have houses, they have stocks, they have retirement portfolios. If you see people below $100,000 of income, people who have below $100,000 of income, who are Trump voters, right? They don't own houses to the same extent. They don't own stocks to the same extent. They don't have retirement plans to the same extent. So what do they want? They want a cheaper entry. They want cheaper entry into the housing market. They want cheaper entry into stocks, right? They want cheaper entry into like different assets. So what is Trump trying to do? Trump is trying to crash the assets. He's trying to crash the stock market. Their housing market is a disaster right now, like in Canada, right? The prices are falling a lot, right? So he's giving an entry point to his voters, people who voted for him.
So there's a strategy to the madness, is what you're saying?
Yes, like there is a strategy to like that madness, because they want jobs, they work with hands, they like there is a great article about it. People who vote for Trump shower after work. People who don't vote for Trump do not shower after work. So effectively it means they work more with hands. And he's trying to help them, right? He's trying to help the voter base that voted for him. I'm not his voter base because I lie in like above $100,000. I align more, like don't align much with Trump policies.
Yes.
But he's doing what is good for his base, right?
Yes.
Now
he's
you can
doing his job.
Yeah, he's not doing his, like we can't say that, right? I don't agree that he's doing his job, right? But he is like he's being a president for his base, right?
But isn't that his job? Being a president for his base?
You have to be president for the entire country.
Yes.
You cannot
Okay,
screw
I
up
see.
people's retirement because they didn't vote for you, right? So
Okay.
there is a different rant, but that is the analogy. Now coming back to the 20 something, if you are 20 something, most probably you lie here.
Yes.
Your income is less than $100,000.
Yes, it is,
You
at that
don't
point in
own
your
too much
career.
assets. So this is the time for you to get into assets. This is the time for you to buy stocks. This is the time for you to buy real estate, right? As it keeps on dropping
And stay out of
and
debt.
stay. Now that part is going to be difficult. That's
that's
the second side of it, right? Staying out of debt is going to be difficult. Why? Because tariff increases costs.
Of living across the board.
Cost of living across
For
the
all of
board,
us.
right? So it increases cost of like you have to stay away from expensive international stuff. Buy more local because those things will not be tariffed, right?
Mhm.
So gone are those like high end BMWs and Mercedes Benz. Do not go for them. 25% tariffs make them very costly, right? Gone are the Gucci bags from like France, like
They'll buy, yeah, or
buy
used.
something local, buy used, buy something local,
Okay.
right?
And move back home with mom and dad.
Yeah, or probably this is the only chance that the younger generation has to move out because the houses are going to become cheaper.
Oh, but then there's that balance of
Yes.
having the down payment, which okay, we'll
So
get into.
20 somethings who can control their expenses are going to end up being the winners.
Okay, so
So
let's
just the key points:
yes,
buy real estate, buy stock, buy assets, right? Stay away from debt, stay away from expensive international stuff because that's going to cost a lot, right?
more than ever before.
So like fancy mangoes coming from India, stay away from them. It's going to cost a lot, right? There is going to be tariffs on them. Like Canadian strawberries, right? Probably going to stay the same because they're not impacted by tariffs too much. So buy those. Buy blueberries, buy strawberries, eat local, stay local, right? Spend local.
Yes.
Yes.
Okay.
And invest local too because North America is going to do well. Okay.
North America is going to do okay. All
Yes.
right. So then let's move into the next generation, yours.
Yes.
What about that 30-something family with young kids? What's your recommendation for them? And that's your area
Yeah.
that you're into. How would you recommend for a young family that maybe is in the highest cost of their life? Careers haven't yet plateaued,
Yes.
right? You're still building. Maybe got your first house.
Yes.
How do they manage through this?
Now, those are the people who are going to be hit hardest because if you see, like, you need certain stuff that is made internationally as a family. You
Yes.
just can't get like away from it. So that's going to cost more. So your budgets are going to be strained more, right?
Okay.
You might have already bought a house, right? It might be an asset in your portfolio, but it is going to become cheaper. So the price that you paid might not be what would be going on in the market. The real estate might depreciate, so you're going to take a hit on that.
If you were to turn around and sell it right away.
Turn around and sell it right away. The second, Canadian dynamics is little bit different. If we continue immigration, right, the real estate continues to stay high. If we reduce immigration, then we will have the same impact that Americans have,
Okay.
right? If you don't own assets, if you're renting as a family, right, then probably it's going to be a good time for you. Rents are going to come down. But if you own an asset, own a real estate house and probably renting it to cover mortgage, then you're going to be impacted out of it, right?
Okay,
So
because the rents are going to go
rents
down.
are going down.
So if you have second or third properties,
Yes.
you might see a difference in your portfolio
Exactly.
that might hit a bit.
Yes. And if you have stocks, they're going to go down, right? There is no silver lining. It's going to, the next 4 years at least, the stock market is going to be extremely volatile. But like young people, right, you should buy, right?
Now, when you're in your 30s and 40s, say your kids are going from preschool to high school,
Yes.
sometimes there's not that extra money to invest during this time.
Yes.
What do the families do during, you say they're going to be hit the hardest.
Yes.
And if they are building a real estate portfolio, they're going to be managing through that. I guess that's still an asset that could grow. But do you know what I mean? Like, how do they take advantage of this?
Stay consistent. Stay consistent. Like, be frugal. This is the time. This next
frugal.
10 years, I would say, is the time to be frugal, right?
Okay.
Anyways, you're frugal when you have kids, right? You don't spend that much.
Yeah, and you
right?
want your kids to have
And
options.
you can like spend money like smartly, because international travel might be you have to avoid, right? It's better to travel locally, go on a camping trip rather than going to, let's say, Bali.
I heard
right?
the RV market is taking off again
Yeah.
in Canada because everyone wants to vacation close to home.
Exactly,
Yeah.
close to home. So that's going to be trend. So it saves money. Be smart about saving money that way. Be consistent. Do not stop investing, right? And fire sale, right? Means you can get good companies at good prices, like in the next 4 years or so.
So slow and steady.
Slow and steady is the solution for people who are in the 30s. And a
And
learning
I'm saying-
aspect to it, do not stop learning. The world is changing.
Yeah.
Like, we are going towards more manufacturing, like trying to create manufacturing capacity, more jobs there, right? So you might want to like revamp your career, right? You might want to learn AI and stuff, right? So
Be
do
prepared.
not stop learning.
Yeah, continuous
Yes.
learning. And that would carry that family then through the 30s and 40s, because I'm thinking if kids are 5 years old right now, for
Yes.
the next 10 years, they're just going to be in high school.
Yes.
So this is going to be a decade of frugality,
Yes.
smart plays, living simply,
Yes.
buying local, vacationing local,
Yes.
and doing our best to stay out of debt,
Yes.
I guess. And little steps will build that momentum over the 10 years.
Exactly.
So this right now is, I guess, and this would be you in your household, is not those big trips.
No.
Staying simple, finding ways to stay local,
Yes.
and have your parents come visit you maybe, then taking everybody over there.
Exactly.
Those kinds of things?
Yes.
Okay. Because I know when the kids start school,
Yes.
you haven't seen any costs yet. You just wait.
Yes.
Because, and I know you're going to want your kids to have
Absolutely.
great opportunities and
Yes.
camps and lessons.
Because not everything is bad, right? Means
Yeah.
if we increase defense spending, just an example that came into my mind, it creates a lot of jobs too. Because you need to have forces, like,
Yeah,
and if we
you're
have to
right.
patrol the seas and protect against like incursions from Russians and Chinese in our fishing water, the Navy has to be expanded. So you need people to do that. So jobs are generated in that, right? So
Okay.
great avenues are going to, the world is going, you're going to lose jobs somewhere, you're going to add jobs somewhere. You need to think very strategically where the world is going. More defense, more manufacturing, more infrastructure, right? So those are the focus areas, even if you're in your 30s. So maybe if you're not finding a job, it's a good time to look at the forces, right? To
Yes.
maybe enroll. Canadian forces do not have an age limit, right? And they require people in finance. They require people in like different
In different areas.
yeah, different
Okay.
areas.
Interesting. Because it's sounding like it's not all doom and gloom.
No.
There's lots to be aware of. Now let's go ahead. Let's go to you're an empty nester.
Yes.
Kids have finished maybe college, university,
Yes.
if they chose to do that.
Yes.
They've got their jobs. You're in retirement.
Yes.
Maybe you're planning retirement. So
Yes.
let's think about the 55 to 70-year-old right now.
Yes.
I had some friends panic this morning.
Mm-hmm.
And they have fully stopped working. And
Yes.
some are like me, still working a little
Yes.
bit. What's your recommendation for that age group?
So, one, do not depend entirely on capital gains. So if you
Okay.
bought some stock, it has gone up. It is coming down, right? So you're going to hit hard by that.
So capital gains,
Yeah.
capital growth.
Capital growth, capital appreciation, you shouldn't bank on that, right, for your retirement. Okay. What should you bank on? Dividends. Okay. Dividends are going to continue. When the markets are down, markets are up, dividends still flow in your account, right? If you have some additional money, right, start buying dividend stocks, because if RBC comes from $100 to $50, it impacts your capital growth,
Right.
but it doesn't impact your dividend.
So you
It
still have
pays
a-
4% dividend. It still pays 5% dividend. In fact, if you can buy it now at 50%, like at $50 instead of $100, your dividend per stock is actually higher.
That's right, it'd be 5 or 6%.
5 or
double.
6%
Yeah.
or double, right? So it is a great time for people who are older to look into dividend paying stocks. And certain things are going to increase a lot. Utility companies.
Yes.
The
saw
energy production in North America is going to see an upturn. We are going to have more AI. For getting more AI, right, we need more electricity. To get more industrial capacity, to get more manufacturing, we need more electricity. To get in those infra projects done, we need more electricity. So utility companies, great buy. Healthcare, we have an aging population. That's not going to suddenly vanish, right? Healthcare sector, great dividend paying stocks there, right? Then you have utilities, healthcare, defense stocks. Defense spending goes up, defense stocks do well, they pay good dividends. Those
Now I know we're not giving people advice.
No, it's not
but
investment advice, but just think.
just think about what we're doing at this stage. And I could see that because I used to
Yes.
have a whole lot of growth stocks.
Yes.
And if I was relying on that capital appreciation,
Yes.
and this morning I saw it go down by 5%,
Yes.
that's a huge chunk of
Yes.
money in my portfolio. And
Yes.
so somebody would question. So I see what you're saying is to think about our portfolios a bit differently,
Exactly.
because even with then the dividends, whether they're paid monthly or quarterly or annually, those dividends could be taken out to live on, but the stock,
Absolutely.
everything stays the same.
Yes, and in
No
fact,
stocks are sold.
if you're not retired, you're close to retiring.
Yes.
It's a very good time to start parking money towards dividend paying stocks
So
or
that's a
dividend
shift
paying
people
ETFs. I just don't want to
Yes.
restrict ourselves to stocks.
It
It
could
can
be
be mutual
ETFs.
funds, it can be ETFs that pay dividends. So low volatility, high dividend paying stocks is where you would want to be in.
And you
Right?
just hold them for the next 10 years.
Yes.
Let
Yes.
them turn out. Now, the dividends can go up and down a little bit,
Yes.
but they would still be being paid out.
Exactly.
And
Because
so,
banks are not going to go away because of trade wars, right?
Right, our
RBC,
banks are-
banks are going to stay. Healthcare is going to stay. Utilities are going to stay, right? So these are sectors that you can count on. Energy is going to stay, right? So that is also a sector that we both are a part of as a province, and
Yes.
that could be a good buy.
okay, so, and what about housing and cost of living? So you've got someone and they're starting to shift their portfolio, or maybe they see their advisor or they're a
Yes.
do-it-yourself investor, and so they start to see this shift. We still have a high cost of living, and maybe there's
Yes.
a little bit of tension over the next 10 years. What's your recommendation around that?
So recommendation about that, it's very interesting. Like Canadian dollar was trading at all-time low,
Yes.
right? But since Trump started this escalation in tariffs, Canadian dollar has started to jump up. Now, why is that? Because countries are going to retaliate on US but not on Canada, because we still benefit from US getting a fair trade with the rest of the world,
Not
but we do
directly.
not take the brunt of it. So if Chinese impose a 50% tariff back on the United States, we are not impacted by it. Like, it's not on our product. When they negotiate a better deal, we get a better outcome for sure. So what is the target that they are trying to achieve? They are trying to export more. The United States is trying to export more. Do that, they want a weaker dollar. Dollar has been too strong. US dollar has been too strong. It's expensive. They are trying to weaken it. But when US dollar weakens, what happens to Canadian dollar? It strengthens, right? So our dollar might start going further, right, in the world than what it is right now. So what does it do? If you are retired, right, it might be a good time to spend 6 months in Panama because your dollars are going to go way further out there. Right?
So to be open a bit more to different ways of living or traveling to maybe for that 90 days or winter months, that's going to come down.
Exactly.
Because our dollar will be stronger.
Yes.
So while there can be this immediate jolt in everybody's portfolio, it's actually not all doom and gloom either.
No.
So there are ways to come around it. And
every crisis will have winners and losers, right? This crisis, this shift in trade policy, which is not going to reverse, right, even if the Trump administration goes away. Some aspect of that is going to stay. Because if you remember, even under Biden, they were talking about friendshoring. What was friendshoring? They were trying to reduce the reliance on the global trade, and they were trying to produce more at home, right? That was their definition of friendshoring. They were trying to achieve it in a different way. Instead of punishing people, they were trying to put more money into the Build Back Better plan. $1 trillion went into building stuff here, right? Manufacturing here. We followed suit too. We gave $100 billion to create battery plants and whatnot, right?
Yes, we did.
So that was one approach. But what does it do? It still decreases the global reliance on stuff. Right? So this is not going away. If you're thinking, this is a temporary blip, no, it's a shift in policy.
So nobody should hold their breath for 10 years or even 4 years while Trump is in power. I did read as well in preparing for our chat that the world has been shifted forever.
Yes.
We will never go back regardless of what happens going forward.
Yes.
And so it was sort of written, somebody had to rip off a Band-Aid, and it was Trump. So whether we like him or not, whether we agree with his tactics or not, whether we're nervous or upset about what happened just this morning with all of our portfolios, depending on how we manage ourselves over the next 4 years, but what you're saying is probably a decade.
More probably.
We have an opportunity here to come out on the winning side, but we have to be strategic about it.
Exactly.
Keep doing what we're doing, stay in the markets, find a way into our homes or however you want to build your wealth. But there are opportunities here to come out on the winning side.
Exactly. Every crisis will have winners and losers. To be a winner, focus your careers more on, if you can, on AI and stuff, because that helps productivity, that helps manufacturing.
Anything that helps productivity and efficiency.
Manufacturing, infra, defense, this is where you would want to stay in terms of career, right? In terms of investments too, manufacturing, utilities, energy production, right? Defense, this is where you would want to focus on, right? Be consistent. If you are young, golden opportunity for you to build generational wealth. If you are middle-aged, right, be consistent with investments. Do not drop off. Be frugal. It's going to be hard, right? If you are older, you have to focus more on dividends and stuff. You can look at different things. Canadian dollar starts going further out, right? It starts to appreciate. You might want to go to some country to arbitrage your lifestyle, right?
Okay.
Yeah.
And that might be something that nobody's thought about before. So in this moment of what might feel like a crisis, there are opportunities. And in massive amounts of change, we do experience the eye of the storm.
Yes.
And in that time, if we stay sort of grounded and keep looking for opportunities, it's where the most innovation comes. So people have to start to be open, I guess, to looking at the world in a different way, which is why we have a new normal today, isn't it?
And like just a last thought, like I want to leave with people. If you have young kids like I do, like we always worry about them, right? You asked it before we started the podcast. What are you going to do with the kids? So it's going to be a different world for them. So the AI is going to like integrate in our lives to a very large extent. So most of the work, even the knowledge work, like writing something, producing something, marketing something, is going to be done by AI, right? Most of the manufacturing part is going to be done by AI. So in that world, what is the superpower? What is the thing you can give your kids for them to succeed? So it's going to be human skills, right? Connecting with someone, focus on that. Try to socialize them more. Maybe a new language helps a lot. It opens a lot of doors for them, right? For example, like Ryan is going into, we had a lot of hesitance, right, initially, because he's going to start a bilingual school, which is Spanish and English, right? We don't speak Spanish at all, but we were so hesitant in doing that. But then it gives him a superpower. It opens up the entire Central and South America for him in order to connect with people, in order to maybe build a business or maybe work down there, right? So think about that. Like language is going to be superpower. Human skills are going to be superpower.
And I would say, I'll just reiterate this. The more we can get our children and young folks to love learning, the better off they will be.
Exactly.
That we are in a constant state of change, and the best superpower we can have is the ability to learn and to stay curious. And
Absolutely.
so during this crazy time, I'm feeling more optimistic today. I don't feel so negative coming into this. Not to take away the impact some people have had with all the action south of us. But as this unfolds, there's lots to learn, lots of questions to ask. And you are in a place, everyone, to create your new normal.
Exactly.
The more we fight against it, or I guess miss what we thought we were going to have, we will miss an opportunity to build a new future going forward, because it is not going back.
Be on the winning side.
Be on the winning side.
In this new normal.
Thanks, Harry. We'll see everyone next week. Have a great chat.